So, welcome back, guys. Today we are going to perform a live on our class that we do for basic and technical analysis, right? So, I hope you guys we have done a class for technical analysis. We will do class for technical analysis, right? So, and I told you guys technical is what we call trading in the world centers of trading. We have trading financial markets. So technical this will trading aspect, which is to solve that technical issue, you must apply mathematics on it, right? So, and I introduce you to technical. Technical is the method that used to predict price movement in a chart. Price movement in a chart of crypto, forex market, or stock market, any type of market. So technical is a prediction. It's not something, and as they just told you, is a prediction. It's not something that you just ghost like assume, just predict. So you have to get logic on it. It's not only about prediction. So you have to get logic on it serious. So we are going to drive a live today about technical, the class that we discover about basic in Japanese candlestick, right? So what are Japanese candlesticks, the type of chart that we are using, and we discover about market structure. The market are moving based on structure, and we discover about candlestick and chart pattern too. So in today's video we are going to do live on these three aspects of basic in trading technical analysis, in doing your technical analysis before you place a trade on your Bybit or anything. If you do the analysis, you will place the trade. So the technical, we are going to do technical based on future trade, because this class is all about future trade, trading price movement. You are trading price movement to make profit. It's not like you are trading spot. It's not like your investment. So technical that we are going to do is all about the trading, and I'm going to at least, as I said that we are going to do class in technical. So before you start a technical analysis, so you have to know what is technical actually. Technical is a method that's used to predict the price movement of a future trade, either crypto or forex. So usually in our practical base we use this broker, we use this exchanger. It's a sex exchangers. It's all about sex exchangers by bit. So for placing our trades, for like uh making your trades, so you can use Bybit, or either you can use Bitgate, you can use Binance. So for doing your technical, now which app we are using to perform our technical analysis, usually use this trading view. See it here, we call it trading view. Let me just enter it like this. Say look first, then look leap. You have to look first and before you leap. So first thing, if you are a newbie to enter uh trade, if you are a newbie on trading view, first thing that you need to know on trading view actually is trading view is a platform that we use to do our technical analysis. Like we used to do our technical analysis usually, we used to predict our technical analysis, anything that consider technical analysis, either you are doing forex, crypto, or you are doing anything that involve charts. So we used to do our technical here. So actually it's not only here that we are it's not only technical that we used to focus on in trading view. So I'm going to show you some features that we usually focus on them. So we usually focus on them. It's not only technical that you can do in trading view, right? So first thing, if you enter trading, first thing that you are going to do, that is a place in your menu bar. in navigation bar under. So you go see menu. After you go to menu, if you no sign up, you go come to here, sign up. Like, make sure you sign up. You see followers and following, so it means this place, there is something what we call social media interact, that you can interact with different people from different community. So you can follow, and you can they can follow you too, and you can publish anything, and you can share ideas. So you need to sign up, and you can refer friends to get more like free trial for 30 days premium, and you can subscribe for premium. And here settings at the up, you can change your chat, your chat terms, like looking background, you can change it, and you can just do any settings that you want. You can come here to the notification, you can on the notification. If you don't like, you can off it. So next thing after on your menu is your community here. So what is mean by here community? It means anything, any person that you follow, or any people that dealing in different markets. Basic background is not only forex, crypto, stock, even the indices, the futures traders. So they can use Bybit, they can use trading view. So this community, any people that follow you, who you follow, so you go dey see his like analysis. The time he post his analysis, you see comment, you see like so dey use to monitor himself here for trading view. If you don't know, so you have to know this. So you go see different ideas for different people. You see this one na like BTC setup for someone, Kevin. So you go see him BT setup, you go see comments, you fit see comments and the rest. So if you want to know for crypto, you just scroll here like this at the up, then you go see crypto, you go see forex, indices, futures, bonds, and stock sef and ETFs. So if you want to know ETF about each market, you go see ETF here. And for crypto, you can just tap here, you go see crypto communities here. So and crypto chat and ideas, the people that used to like share ideas, you go see them here, right? So after then, you go see, you can just scale on, then put it like new list or populars. So next thing is exploit. So you can do also your sentiments in trading view. It's not all about charts doing the analysis or something. You can also do your sentiment here. So what is sentiment? To take the variation of technical, the variation between manipulation between buyers and the sellers level. So you can also do your sentiment. You see overview, this one are futures. So you can check futures, you go see like US 1000, US 2000. So you can see our US index. So for crypto, if you come to here, you go see, you see, you can check sentiment, new flow, BTC mines over age makes them key AI infectious players. So you can see sentiments, anything about market. For you see losers and gains. So the crypto that gains within 24 hours, and the crypto that lose within 24 hours. So you can see their sentiments here. And if you no see any cryptocurrency, you fit search it here, that you are looking for its sentiment. You fit search, or like for bitcoin like this, when you tap to bitcoin, it will give you bitcoin sentiment. You see overview, like you see key statistic, market capitalizations, full diluted market cap, and trading volume 24 hours, all time high for BTC. So and it will show you circulatory supply sef, maximum supply, total supply, and it will show you technical sentiment too. You can go to, like, you want to view more sentiment for BTC, so you can click on more. You see time frames you can check for 4 hours, and you can check for 1 hour, and you can check for 30 minutes, 15 minutes. So all these things are important in trading. before you check a trade, before you do your analysis, you have to come and check here whether if there is news overview for it. You see, you can check only uh the coin that you are trading. You can check its news, you see BTC news, you see, and mines. So what we call mines, like different mines, different like ideas for in BTC, you can check it here sef. So you can check mines and you can check ideas if you see it here. So I think my network is uh so you can check ideas too. So you can check ideas. So the next thing is you can view all the market sentiment. The next thing is chart. Here be that, where you go just perform your technical analysis chart. So here is the place where you go perform your technical analysis chart. So before we enter here, right, so you have to know what we call watch list. So actually watch list is a place that you just add a specific coin that you always trade, or that dey your plan. Actually, like now, me I dey trade BTC, I dey trade SRP, I dey trade other, I dey trade many, like 5 to 7 coins. So I'll just add it here. It's not like if anytime I will come, I will just go and search the coin, I will just see it here. Watch list will stand it like here, so that anytime I just come, I want to enter the trade, I will just pick the trade, the actual thing I want to trade. So now if you want to add your thing in your watch list, a coin in your watch list, actually first thing that you see this plus place at the top side. So you go see plus place here. So when you click on the plus space and you are going to search any coin that you need, you want to add it to your watch list. For example, now if I want to add hbar hbar cryptocurrency, hbar USDT. So here you see different hbar cryptocurrency, right? Different with plenty hbar. You go see them plenty. So what you need to know here, like, there is a chart for spot traders and there is a chart for future perpetual traders. The people are trading price to make money. So na wetin like we focus on trading be that on our class, future perpetual. So you are not trading spot. If you are trading spot, then you are going to choose the spot chart, because na why you see plenty hbar here. So if you are trading spot, you are going to choose the spot chart, because the times the chart is not moving based on like variation like each others. So you have to know this, and you are going to see like each hbar has its own exchanger. So it means any exchanger get interest rate based on the price future perpetual and based on the spot future perpetual. So you have to know this. Each exchanger get its own trading rate. So if you are trading on Bybit, so you have to look for Bybit exchanger. If you are trading on Kuken or like Mex or Bitgate, so we are going to check if Bitgate is offering that particular coin that you are going to trade. So for example, hbar, we are trading hbar, like we see here, we see hbar first column, then we see hbar spot crypto, we see Binance spot crypto. So we are not going to trade in Binance. And the second one, we see hbar Bybit spot crypto. So we are going to trade in crypto, but actually this one is a spot. So you come down and look for another Bybit. So if you no see it, it means that you cannot trade hbar in future perpetual in Bybit. So there is not future perpetual in Bybit for hbar. So actually you will see it here, hbar Bybit, you go see swap crypto under. So if you see hbar swap crypto, it means future perpetual. You see hbar.p, it means .p. So then you add this your plus sign. So after you add it, you see it adds to your watch list. So after e add to your watch list, then your thing is on your watch list. Can add any coin, you see ba, under my watch list, it appears. So what you need to do now, if you want to trade, for example, you come to your trading view. Actually, let's comot like this. I want to pick a trade from my trading view. I just enter like this. So actually it will take me to my watch list. So after e take you to your watch list, next thing that you are going to do here, you are going to just select the coin that you are going to do your analysis. For example, if you might pick a SRP, so you go just swap. You see this one is a SRP USDT, so you go just swap SRP USDT spot. So you go just swap like this. After you swap, then you enter the chart, and this cancel wey you see for off, just click the cancel. So it will automatically take you to the chart of the SRP, So for example, if you want to change after e take you to the chart, this is the chart place for SRP. So for example now, if you want to like change a chart from SRP to another coin, so you go see under here, you go see SRP USDT, then you see something like X, one H, then you see sign of pencil. One H, it means time frame. So you go come here where you see SRP USDT, then you go tap. After you tap, you can search for any coin that you are going to trade, like grass USDT. After I search for grass USDT, I see Bybit spot. No, I'm going it's not spot I'm going to trade. Then you go see Bybit perpetual under. So you see it take me to the grass chart again. It swap me from the SRP chart to the grass chart. So from here you can do your grass analysis. So me, I'm not going to like if you want to change it, you can come here to your favorite. It means this watch list, it means your favorite. Then you see your favorite cryptocurrency that you are going to trade. You go just swap to the SRP, then tap on the blue place where you see sign place, then uh put wrong. So after you call it, will take you back to your SRP chart again. So this is a chart on trading view. So actually a chart in a trading view is like we are using a what we call Japanese candlestick chart. There is type of chart, there is line chart, there is a bar chart, there is different charts. So but we traders, we are using candlestick chart. Those are the candlesticks. So from your chart, actually if you just open it, you are going to see green and red. So I'm going to explain that too, and you are going to see the green and the red. So actually what I want you to know, you can change the color of any chart like this. If you double click on the candlestick like this, you are going to change you fit you see ba, you fit change the color. If you double click on the candlestick like this, you just double click, then you are going to change any chart color, you see ba. So my here ba, my red is my black. So like I just told you, the black ones are my red, and the green ones I leave them as their green. So in your own you go see red and green. So here my red is a green, I change it to black. So the chart is moving based on time too. This chart, Japanese candlestick that you are seeing, those are the candlestick, they are moving based on time frames. So any time frame you are seeing, what we call time frame, because they are moving based on time frame. Any candlestick that you are doing here, you see here, he do that time. Actually after e finish its own time, then it will close and open another one. So we have different time frames. There is 1 second, there is 2 seconds, there is like 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours, 30 minutes, and we get even dailies, and we get even yearly, monthly. So those time frames you can change it. You can change it to any time frame that you want. So I want you to know, on this my chart you see something here where you go come search your SIP. You see SIP under, you see what we call 1h, right? It means 1 hour. So you go see time frames here, guys. You see different time frames ba. You see daily. Let's start from this day, 1 week, 1 month, 3 months, then 12 months, 6 years be that. Then hourly we see 1 hour, 2 hours, 3 hours, 4 hours. Then minutes we see 1 minute, 2 minutes, 3 minutes, 5 minutes and 10 minutes. Then seconds we see seconds too. So on those time frames that you see here, you can change it any time frame that you set it on your chart. Like this, like my chart is it's set on 1 hour like this. So it means any candlestick that you are seeing here, e do 1 hour, no matter the big and the small, both the green and the red one, both the green and the red one. So e do what we call 1 hour. Even these small ones wey dey see do 1 hour. So after e finish that 1 hour, it will close its points at that particular time that you just stop. Then it will create another one. So you can change it. And if you change it, like now my chart dey 1 hour, if I change it to 4 hours, so it means any candlestick on that 4 hours chart, it means the candlestick time is doing based on that 4 hours. Any candlestick dey in 4 hours. So like you see here, I want to, like you see here, you see this one is the current candlestick that is moving, right? The current candlestick that is moving, and you see something what we call here the price. So this is the price actually, you see, but the price of what we are trading, the price of what you are trading, because you are trading future perpetual. So this is the price of what you are trading. You see SRP, spot trading. So this is the price of SRP now. SRP is 0.82 213. So you are trading the price. If like you predict in this technical that this SRP will reach here, so after SRP jump from here to here and reach here, so you make a profit. And if SRP no go up like this, come back down like this to here, 2.72, you lose money. So you are predicting this price movement. So the candlestick are moving based on price, and under it you go see time is reading. You see 07.15, right? So it's reading, time is reading based. So it means this candlestick are based on time. So you can change it based on the strategy. So on my day trading strategy, you see, and my swing trading, I add my 5 minute on favorite, 15 minute on favorite, then like 30 minutes on favorite, then 1 hour in favorite, 4 hours in favorite, and one daily in favorite. So you can just come here down like this. Any time frame that you are going to add it on favorite, you can just like click it, hold it. After you hold it, it will come to your favorite, then add favorite. So if you want to disfavorite it, then hold it again, remove favorite. That is all. When you add it to that favorite, when you come here to change the time frame of your chart, you can just come here. You see e dey in 1 hour like this, 1h. So you can change it to 4 hours. You go see my chart, you see ba, my chart change, and the candlestick don become less. It's not much as 1 hour own. So you see any candlestick you see here, e do 4 hours. So you are going to predict based on that time frames. So now why I said there is time series analysis, but that one for my advanced class. If you want do, you can DM and get the mentorship. So 4 hours. So after you come here 4 hours, then you can change it to any time frame. And here let me change it to 15 minutes. You see the time frames are currently plenty here, but so any candlestick you see here is under 15 minutes. So those are the time frames that you need to know here first, the thing that you need to know based on the chart firstly. So and on the up you see SRP, you see SRP spot, it means it's the SRP spot chart. So if you see this spot, it means it is spot chart. And you see the SRP charges, the read, and the buyers variation and the sellers variation. So next thing is like what we are going to focus on is know the level where the chart is moving based on the chart is moving, because our chart of trading view is moving vertical and horizontal level. So guys, next thing that you are going to know on this trading view, as we just talk about time frame, is the way the chart dey move. The chart is moving based on what we call horizontal vertical. You see, this is horizontal, right? This is an horizontal, right? So, and this is an vertical. So the chart of trading view is moving based on horizontal vertical, not only horizontal. So you have to know this firstly, because this chart is something like graph. You know graph for school now. If they tell you say something like graph for school, so let me just like make my screen to be portrait so that you guys can see it more. So like you see, like I'm just talking, the chart is moving like vertical horizontal. So what means here, you means in school our vertical, our horizontal is our y axis, right? And our vertical is our x axis, then this is 0. So it means vertical means it starts from, horizontal starts with price. If now they give you data, like for example for statistics, it will start from price. Like let us just add horizontally, it starts from price like this. For example, this is your price, this is your first price, and this is your second price, your horizontal be that, and this is your third price, and this is your, and this is your fourth price, right? And this is your like at least fifth price, the last one. So you see, like I just, the way I just like put the price, actually the time wey you just see it, like I just put the price, you guys, you see that the horizontal just underline the price here, you see ba. Our fifth price is 2.8999, then our fourth price is 2.8759, then our third price is 2.8494, then our second price is 2.8457, then our last price, the first price that starts, that comes from 0, is 2.7993. So it shows you that trading view is moving based on price, right? This one is our first price, our second price, then our third price, then our like fourth price, then our fifth price. So the price comes start from here, 0. Our price starts from here. Let me when our price starts from here, 0, right? So this price that starts from here, the 0 bar, right? Then this one is our horizontal. So it means our horizontal dey reach our price for the market. Dey reach our price, go up and down. So it means the price starts from 0 and hit like at least $1. After this $1 like this, then $2. After $2, then $3. After $3, then $4. After $4, then $5. So that is how this candlestick are working based on, like I'm about, they are working not straight, they are working based on structure, based on wave. So the next thing that you guys have to understand is this horizontal, this thing that you see numbers in down. You see, if I zoom it, you see October, then you see 3rd October, 5th October, 7th October, then R 13th October. So in this chart we are in what we call on 10th October, you see. the candlestick dey on 10th October, and on that on 10th you go see price, you go see time sef, specific time now. You see ba, we dey around like 3 o'clock actually, we dey 3 o'clock, right? So for our chart now, it's moving based on what we call horizontal. See our horizontal, that is our data. So you cannot trade this price only, you can never trade this price, this horizontal place. You can never trade this horizontal place only, guys. You grab, but you can never trade this horizontal only without these datas, the days of this price. It means the data shows the days of the price, the days of the price. Sorry, our chart don turn to like h bar. Let me take it back to sip. So like we see, guys, our chart is based on horizontal vertical. So you have to deal with these datas too. The chart is dealing based on datas, the price are dealing based on datas. Days, you see we dey on the 10 actually, and we don in 24 hours we are in the center now. On 11 date of 11, you see by 11 o'clock. So on 11 Saturday, tomorrow, then our chart will be here. So actually those datas, that the one what we call volume. You can just add it, you go see it like this. Like for example now, in first day, for example now, in first day of an October, you go see chart hit up like to $2, right? Then in our second day, then in the second day of an October, then chart comes to like $4 like this. Then in our like third day, then chart like just take this $3 like this. So next thing kuma, in our like fourth day, then our chart comes with $1, just $1. So then our chart from that $3 come back to what we call $1. Then our fifth day, presently you see, then our chart comes to $5. So for example now, so chart dey move. If you want to calculate this price, first this is your price, this is your horizontals, those are your price, and secondly those are the datas of your price. Actually these of your price. So now we used to focus on this price only. This is the candlesticks. On my second chart I have what we call volume under, so that is the datas. So but this chart, there is no volume. I do not activate volume because the trading view I'm using it for spot trading. So for example now, those are our candlesticks. So they are moving based on this horizontal, based on this price level that you see, and our volume chart, the datas, it's moving based on this uh one that I just draw now, rectangle that I just draw like this. So it means that this price are moving based on data, based on this. So you can never like predict your price, you can never predict your price or calculate your price without these data. If you want the price to move for you well, so that you can get something average without any interruption of market. Na why some people dey lead to like get sl on market, or dey lead to get missing entry, or the market will start moving very slowly for them. So it's just because we no consider what we call these datas, the days of our data. We usually just predict the price here. We usually predict our price based on those tools, like you go just underline order block, underline wetin and the rest, or know your breaker block, or like underline supply and demand. So supply and demand kuma dey work based on data. For example now, wetin I mean like this, if they give you graph like this, they will give you graph with the price. This one na $5, this one the second one na $4, then this one na $3, this one na $2, this one na $1. So and the $1 start with $0 here. So they will give you these datas so that you can predict the next movement price, either this market is going to make another high price to $7. This market from this $5 im go like come back to this and make like this prediction will move from this $5, either e will come down kukuma e will make a new term high for market. So for example now, from this $0 market start after the launch a coin, we start the coin. So e start from $1. So the first day and the market comes to like $2, and the second stage, like the second day, our datas of our price come to like from that $2 to $4. So after that, from that $4, the next day we are thinking that the market will go up, and the next day our data look that the market come back to what we call $3 here down. So after the market come to $3, on our prediction and analysis, then our data come, our fourth day the market come down from that $3 to $1. The market come down. So then our second day, on our fifth day, sorry, on our fifth day, then the market come the $5. So next thing here is what we are doing in trading actually. So next thing that what we are doing here is we usually predict our price. So now tell me, if you want to predict the next price of this like current this current day, if you want to predict the price, at least like for example right, for example this is our 6 day, 6 days. So if this 6 day comes, you go tell me say like you go just predict your price without calculating of these datas to get your data, because your data will actually tell you like buyers pressure or sellers pressure are more higher than the buyers pressure. So you are not going to predict the price first. You have to know the volume, variation between the buyers and the sellers, because it's the one to determine that this price is going to go up or come down at the 6 days of your price. So for example, after you calculate your volume, after you know your volume, like the buyers are going to take the market. So and what you are going to do on your prediction that the buyers dominant are more high. So on your prediction you will just like tick it, like you are thinking that the buyer will take the market to like $6, at least like $6 like this. So your volume give you buyers dominant of today based on your calculation of datas. So after you calculate it, so then you are going to predict your price, your price here. You are going to predict your price and set your trade, that if this trade, or based on your prediction of price, your trade from this $5 will come to this $6. So after you predict, you see your price come to that $6 because you calculate the volume. So but we trade without the calculation of volume. So na why sometimes the market dey move our Excel, we get some missing entry, and the market is moving very slowly. So those are the things that you need to understand first before you start an analysis in trading actually. So guys, I hope you guys understand this, and now we are going to drive into our main class of technical. I just explain this for you guys so that you guys can just get it on the right way. I know there is some newbies, and even you are newbie, is something that you need to know. I know most of you guys doesn't know this, and even if you are in advanced to intermediate level, so you need to know this. So and next thing that you guys might have to know is, you have to know that this chart is moving based on what we call vertical horizontal, and these are the tools that we use to we used to do our technical analysis, predict our technical analysis. I hope I drop it on trading view, I drop it on the group so that you guys can might add it to your favorite. So if you don't know how to add it to your favorite, you see something like this, like pencil of drawing. So you can come and tap it like this. After you tap it, you see drawing. So you can come and select all the tools. I put it from the group. You can select. You see those are my favorite, like trend line, horizontally, Fibonacci replacement, long position, short position, brush, and the rest. So I will just like take one by one, explain briefly for you guys. So Fibonacci is a tool that's used to identify the fixed value of an liquidity, like discounts or premium discounts or liquidity. So that is Fibonacci. That is it. Then horizontally, like identify the price level of this is horizontally to identify the price level of then this one is long position. What we call long position is if you are taking a buy, so you might just keep it. You see my long position that so on your own you will see red and green. So make sure the green is no longer more maximum than the red one. So the red one is minimum and the center line that you see that separates the green and the red, that is your entry, what we call entry price. So these are your positions. Like now, I want to take a buy from this market. If I set it like this, so that if SRP comes to this where the green stop 0.20712, that is my target that SRP will come. After it comes down, want me from her. But if the market comes against me, the place where your red stops, you go see numbers in your price chart. So that is your SL. You need to understand this on them. Then this one is a trend line that used to add you can if you identify your trend. This is a brush that you can just draw in the market to identify something reasonable like drawing. Then this is arrow. Like if we want to narrow is something like this. For example, if I want to narrow something on the chart, so you can like use it. And this is highlight. If you want to highlight a chart, for example, so you can use it too. And this is a short position. I show you a long position for buy or for bull. So this is a short position. You see my black is on up. So when you see the red one on your chart, because me I change color for my own, on your chart you go see the red one is looking up and the green is looking down. So that is short position. That is short position is same thing with the long position, but if you want to take a sell you will use short position. And this triangle, yeah, you can identify your like demand, supply and demand, or any other block or any increase on the market. You can use it. And this is the part like to draw your trend. You fit draw your trend. So you fit draw your trend with this part like this. For example, if you want to identify a structure based on market is moving based on trend, so that is the part. And this is text, to text on the on the market. When you just tap on what you want to like put on the market, you just tap it and just click it on the chart, then it will come out. And the last thing is the picture. So if you want to add on the picture, so next thing that you need to know, you can set your place where you see alarm like clock here. You can set your chart on alarm to create an alarm for your chart, and you can change your charts to like, even if na land chart like I told you. You see this is a land chart, I'm about using candlestick chart, so you could just leave it to candlestick chart. So the next thing that you need to understand is what are those Japanese candlesticks. You need to understand these Japanese candlestick very well. So if you know you don't have a better experience on this, so just stay focused on this video, and we are going to do our class for Japanese candlestick. I think I had a picture on this. So I think is not on this chart. We are going to, like, let me check the other chart, which bar. So thing we are going to talk about what we call uh Japanese candlestick structure. So the way you see here, this is our Japanese candlestick structure. So we get red, we call it bearish, and we get bullish, we call it bullish. So the bullish one, if you hear the bullish sound, it means buy. If you see the green one, it means the market, the price is going based on buy. If you see candlestick green, so it means on that point buyers are taking level of that present price. And if you see red one on your candlesticks, because my own is black, so it means this bearish is red, so it means sellers are taking level at that price. So and it get structure seriously, because you go see some candlestick get like wick and body, wick and body, the way you see this wick and body, right? So what I want you guys to know, like, on this bullish candlestick, bullish, it starts opening at, because I told you candlesticks are open based on time frames that you put on your chart. On, if you see my chart dey on daily. So each candlestick need 24 hours before it open another one on this chart, present chart of my chart. So it means each candlestick opens, it get a starting point, like it opens. So the starting point for bullish, since it's buy, it's going up, right? So it starts from up, it opens from down. So after it open from down, so when it's finish that time, like when it finish its daily time 24 hours, or it finish, this candlestick is for, this chart is for 4 hours. So after e finish that 4 hours, any place that the candlestick dey, it will close itself, either small or big. So after e finish that hours, so when it opens from down, and it will close from uh when it's open from down, and then it will close on down, because that is bullish, that is buy. So it open from down and close at up after e finish a specific hour that they set on the chart. So what creates this wick, this line that you are seeing, this wick, we call it wick. It's high wick and low wick, that is high wick and low wick. So what cause it? It means that this week on bullish, what caused this week is sellers variations. So after this bullish open, firstly the bullish candlestick open, it starts, it comes from bullish, it starts coming like, oh, it creating a bull. So when you see this week, it means sellers variation can't take place, like can't take price on the candlesticks of bullish. So they can't take the price when the candlestick open, see, they can't take the price down, down like this. After e reach that, this point, this last point, so then buyers come back for the market, then come take the candlestick up. So it will create a wick from the opening side, the way the market just open, so, and where the sellers stop, where the sellers variation stop. So it will create a wick, because that price actually is not price for bullish, is price for sellers. They are the variation of sellers that take that point. So at the up, then when you see wick for up, higher wick, it means sellers take, buyers take their price to here. So the price of buyers stop here. So after the price of buyers stop here 4.3, right? 4.3. So then sellers come take this market variation back. So they can't take the variation of market back. So after they take that variation of market, then this time of this candlestick finish, So this place it will create a high wick because sellers can't take the price back at the point where the candlestick stop. So it will create another, then after it close it will create another candlestick. So it might start with bearish or it might start with bullish. So that is the basic representation of bullish candlesticks. How the wicks are created, you go see one candlestick it get low wick without this high wick, one with full body without the wicks. Then the next thing is what we call bearish candlestick. So bearish candlestick is sell candlesticks. It opens from down, it opens from up. You see ba, opens from up, it starts from up because it sell. So it will start from up. So when it finish its time, like this candlestick finish its daily time frame, kukuma hourly time frame or minute time frame that you set on your chart. So when it finish it will close and open another one. If the chart will, if the candlestick is downtrend it will open from down and close at down too. So it's open from down and close at it's open from up and close at down. That is bearish, the red one. So you might see it on my chart, the black one. So what creates this wick on bearish is bias variations, is bias variations on bearish, the variations of bearish. So after this bearish open from up, so it means when the price come to the like moving, so buyers come take the market price, they come get power than the sellers, they come take the market up like this to this price. After they take the market to this price, then the price stop, then sellers back to their point, then they come variation the buyers. So when the price come back to the open place of sellers, so this might create a week of buyers variation be that, because now buyers create the price go up. So and the down one, it means sellers take the market to this point and buyers can't take the market back to the place where the candlesticks opens. So that is how candlesticks are used based on charts. That is how candlestick are used based on charts. They use to visual representation based on charts. So you need to understand this, guys. So actually, because there is candlestick patterns and there is candlestick charts. So and the next thing is you need to understand what we call market structure, because if market is moving, it's not moving on up. So market are moving based on wave. So you need to understand this too. Market are moving based on what we call wave on the chart actually. So market are moving based on wave, based on the chart actually. So like this one is a wave of uptrend for buyers. So and the second one is what we call downtrend. You need to understand this downtrend actually. So market are making are creating based on wave. I hope I add the pictures, I add the pictures on the group. So market are making based on wave actually. So this is how market are moving based on wave. This is what we call actually uptrend. You can call it uptrend, uptrend actually. Then on the second hand side you can call it downtrend. So market are moving based on downtrend actually. Is if you see like market is moving, market is not going like up actually, it's not going, if market is going up it's not going up straight actually. Like for example now, market if want to move down, it's not moving straight down like this, it's not moving straight down like this. So it's creating wave because there is much variation of buyers, variation of sellers, variation, but actually the variation is the variation of the market na sellers variation like take the market plenty. So you have to understand this, the market is not going up like this. So you might you have to understand this, guys. You have to understand this. So what is what we call downtrend and uptrend, and there is sideway too, what we call consolidation. The market is not moving based on buy and sell. The market is moving based on center level. We call it support and resistance level. Actually, so we call it the market is moving based on center. So actually you can read it like this. So if you see market is moving based like this, uptrends, right? So it means market are going based on bull. The market is going based on buy. It's based going on buy. So the first confirmation that you need to know is from the wave. The wave will start to create what we call from low to what we call higher high. So after it create that higher high, it will come back to your low because there is an like demand zone here. So after you take that demand zone, then you tag, you are going to like tag another, you are going to tag another higher high here. So this is higher high. So after I create that higher high, it will come back to your like low high here. So after I create low high for here ba, so then it will create new higher high. So after I create that new higher high, this is your new demand zone. So you are expecting the market should come back to your demand zone like this. After it tap to your demand zone, then it will create another higher high. So after you get these three confirmation like this for trade, actually the market is creating based on wave. And so you can pick a trade from these three confirmation, because the market start to dey move higher high, higher low, higher high, higher low. So you can pick a trade, you can put your position of buy if the market dey higher high. Actually or the market dey like this, so from here higher high, so you are expecting the market to come back to your like lower high demand zone. After e come, so you can put your buy position like this actually on market to tag the new higher high that the market will create, and make sure your stop loss is under your lower high actually on the market. So this is how a this is how to trade with uptrend direction. Through the market is moving based on uptrend. So if you want to know this is an uptrend first, you will identify it first. Identification of uptrend. So make sure the market is moving higher high, higher low, higher high, higher low, and you dey identify it higher high, higher low on the market based on the market direct. And the second confirmation you might see, if you view the chart very well, you get the confirmation of high high. So you go see buyers candlesticks are more bigger than the sellers candlestick. You have to know this. The buyers candlesticks are more bigger than the sellers candlestick on uptrend, because the bullish candlestick is the buy and the bearish is the red is the sell. So the bullish candlestick are more bigger than, make sure the bullish are more bigger than the bearish, the sells owns, because this is an uptrend, is a buy market. So that is the second confirmation. The third confirmation, you might understand that these candlesticks are more plenty. Buyers candlesticks are more plenty than the sellers own. The bullish candlesticks are more plenty than the bearish, because this is an uptrend. So if the candlestick of sellers are plenty than the buyers own, than the bullish own, so this one is not an uptrend, it's not an up. So if you hold these three confirmation, it will give you. Then the next one is uptrend, downtrend. So if you see downtrend, it means the market is moving based on down. The market is moving based on down, sellers level. It starts from up, what we call low high. It starts from low high, then it will create low here. So after it creates low high, low, then you are expecting your supply zones here. So the market will come back and take that your low, your first low. After it creates low here, your market will come back to take this low high, that is your supply. So So after e create that low high, so it will create low high new for you here. So after e create new low high for you here, so it will, after e create low, so it will come and break this low. After e create this low high, it will come and break this low and create new low here. So after e create that new low, it will come and take this your supply, you see ba. After e take your supply, it will create another supply. So when you get this three confirmation, so you can pick trade from the third confirmation be that. So after that, you come and put your position here, because the market don create lulu, you see ba. Make sure the market create two lulu before you take a trade. One first lulu, second lulu, then third lulu. Make sure it creates this third lulu, three lulu for you. So after e create from that three lulu, before the market come back to your low high, your supply, so you might put your position of sell like this. For example, you might put your position of sell, sorry, position is based on, you might put your position of sell, so you might put your position of sell like this, guys. So you can put your position of sell like this from your lulu. After you put your position of sell for your lulu, then you tag another your new lulu that the market is going to create. So you see ba, then the market will create your lulu. So after you do this, that is uptrend, downtrend. So this is your what we call a second confirmation, a first confirmation of downtrend, second confirmation. So after, before you take a trade first sef, so check that the bearish candlestick, the seller candlesticks are more bigger than the, on that downtrend, are more bigger than the buy candlestick, bullish be that. The bearish candlestick, sell candlestick are more bigger, are more momentum candlestick than what we call the bullish candlestick. So it gives you second confirmation that you can pick a trade for sell. So the third confirmation, which is last one, you go see from this up downtrend, the candlestick of sellers, they are more plenty than the buyers own. They have to be plenty than the buyers own, because na sellers dey take the market, not buyers. The buyers are just getting like manipulate, like variation. So the candlestick of sellers, they are more plenty than the buyers own. So you have to get this confirmation, then place your trade like this that we just take. So the next thing is what we call sideways consolidation, actually support and resistance. So this is your support, the sell down, the sell own, this is your support, and this is your resistance, actually the buy zone. So what means from this market, it means that the buyers candlesticks and the sellers candlesticks are equal. The market is moving based on neutral, like the market is moving based on neutral. After it takes this buy, and it will come back to sell. After it take the sell, it will come back to this buy direction and come back to sell direction, like moving based on wave on center. So there is not an equal buy, or there is all not an clear equal sell. So there is not an equal clear buy or clear sell. So the market is moving based on sideways, actually no clear of buy, no clear of sell. So the candlesticks are equal, the buyers and the sellers candlesticks are equal. So you can pick a trade from the support, like just tag a support here and pick a trade to here, then you make your profit. Or you can pick a buy from this resistance level to your support and make a profit. So that is what we call consolidation. This is minor trade to trade. Or either if you are going to trade outside, So you might look for confirmation of breakouts. Make sure the trade breaks that resistance level. You see, this is resistance, the buy level. The trade breaks like this for the buy. So after e break, it will retest like this. After the retest, it will come back. Then after the retest, the trade might go up some if there is an liquidity. So that is what we call support and resistance. So the last thing that we discover with you guys on chart is what we call candlestick and chart patterns. So candlestick chart patterns are shape that used to represent the visual representation of chart movement. So it will give you actually the way the chart are moving based on variation. So you need to understand this. The first things that you know, chart patterns are shapes that mix on market based on trends, and it will give you more like accurate profitable sign of the market will continue or the market direction will reverse. Like, the market, if the market is moving an uptrend, there is a possible the market will reverse from that uptrend to downtrend. And if the market is moving an uptrend, there is a shape of chart that sometimes it will create, and the market will continue moving in that trend. So what we call it chart pattern, that is an uptrend, and that is what we call actually that is an uptrend, that is what we call continuous and reversal. So on continuous, that is continuous of downtrend, and that is continuous of uh uptrend, and that is reversal of downtrend, and that is reversal of uptrend. So you have to understand this. From my picture, you see this is like what we call descending triangle. So descending triangle is like what we call continuous of downtrend. After you see this market make this shape at that variation, so you might set your sell position from here. After you sell it, your TPA or SLD here, then your TPV down. So then it give you sign that the market will continuous on down. So the next one is what we call continuous on bearish. Bullish continuous on uptrend is ascending triangle. This one descending triangle, that is for downtrend continuous. This one ascending triangle, that is for uptrend continues. So when it you see on uptrend it creates this shape, it means the chart is moving base up, is going to go up actually. So it will continue going up. So then the next one is bearish flag. So when you see this bearish flag on downtrend, a chart create this bearish flag on downtrend, it might possible continue on that downtrend. So you just tag it as you see it on the picture. So then there is bearish flag too. So when you see this very flag, actually it means on uptrend with that. So it is possible that the market will continue on uptrend because you see a bearish flag candlesticks. So you have to understand this. So the next one is on down like this. So the next one that you see, that is a bearish wedge and that is a bullish wedge. So when you see this one, this bearish wedge on downtrend, actually a chart create this bearish wedge on downtrend. So you might go and like study them, all of them. I just show you here from the pictures. So you might go and I will drop it on the group, so you guys go study it. When you see this one on downtrend, actually this shape of chart, so it means a possible the chart is going to continue to downtrend. So when you see this bullish wedge on uptrend, actually the market is coming from uptrend and create bullish wedge, it makes you a possible continuous of what we call uptrend. So the last one is symmetric triangle and symmetric triangle too. So symmetric, when you see this kind of symmetric triangle on downtrend, it's a possible of the market will continue on downtrend. When you see this symmetric triangle on like uptrend, it's a possible that the market will continue on what we call uptrend when you see this symmetric triangle. So actually you have to understand this, guys. So this is for continuous. That is continuous for bullish, and that is continuous for bullish, that is continuous for bearish, up downtrend and uptrend. The green one is the uptrend and the red one is the like downtrend. So that is reversal. The market will reverse, like the market is moving on downtrend and reverse to uptrend, or the market is moving on uptrend and reverse to downtrend. So this red one is for downtrend. If the market is moving on bullish, be that uptrend, the market actually is moving on bullish. So to it might reverse when you see this held and shoulder. The first one, held and shoulders on uptrend. When you see held and shoulder on uptrend direction, it's give you a sign that this market will reverse from that down uptrend to downtrend. So the reversal of this downtrend, so reversal of downtrend, when you see this inverse chart, when you see this inverse chart on downtrend, it give you sign of this market from downtrend it should reverse to uptrend direction. Then the next thing is what we call uh okay guys, sorry, I just deleted the pictures. Let me just add it again. So actually we are on what we call chart pattern, right? So when you see this what we call this inverse, it give you possible that the market is going to change from downtrend to uptrend. So the next ones are raising wedge and failing wedge. So raising wedge, it means that the market is moving based on uptrend. So when you see this raising wedge on uptrend, it gives you a sign of reversal to downtrend. So and the next one is failing wedge, is making from downtrend. A failing wedge, when you see failing wedge on downtrend, so it gives you a possible reversal from that downtrend to uptrend, like you see it here. So you need to understand this, guys. So the next two ones are double top and double bottom. Double top, when you see a double top, is makes from uptrend. Or double top, you see it from uptrend. So you see double top on uptrend, it give you a possible reversal that this trend is going to reverse from that uptrend to downtrend. Then double bottom, it means it comes from down. When you see this double bottom from down, it gives you a possible reversal that the market is going to change from that downtrend to uptrend. So the last ones are triple top and triple bottom. So when you see this triple top at the uptrend of the market, you see market create this chart shape triple top. So it gives you a possible reversal that the market is going to change from that uptrend direction to get down. So then triple bottom, when you see triple bottom for down, it give you a clear variation that this market is going from downtrends to reverse to uptrends. So those are the charts that you need to know, chart patterns. When you get these sheets, so you need to go and study them. The next thing is what we call bullish candlesticks. Bullish candlesticks are sign of like shapes of candlestick that usually you need to understand them. When you understand them, it will help you to know that this is a sign to enter the market or exit the market. Either enter or exist. So on our first looking, we have what we call bullish Maruzuku. So when you see this, is a sign of that this thing is going to become a buy. It is time to enter the buy signal. So when you see bullish engulfing, it gives you a clear sign that this trade, when you see these red candlesticks and green candlesticks, the red one small, the first red creates small and the second one candlestick is green and it creates big than the red, so it's called what you call bullish engulfing. So you might check it in 15 minutes if you be day trading to get clear candlestick patterns. So when you see this bullish engulfing, it give you a sign just to enter the trade at that existing point, or you might just set something to exist. So and if you see this candlestick pattern, single candlestick pattern, so it means this one is what we call bullish hammer. It will create a small body and a long wick, lower wick, a long lower wick. So with green candlesticks, actually you see it is a sign of a buy signal, to take a buy. Then Swiss button and inverse hammer, then morning stars and the rest. So when you see this Swiss button, it give you a sign that the market is going to like what we call bearish, down actually. So when you see this inverse hammer, it means that the market is going to go bullish actually. It makes a bullish when it comes with these green candlesticks and create a long high wick. So it give you them morning dodgy star. When you see these three candlesticks with this small red and small pieces of candlestick and this big bullish, it give you a sign of bullish candlesticks is going to make here, bullish trade is going to make here. So those are what we need to know on what we call bullish. And the third ones are all those three rules, these three rules columns, they are for the bullish that we are doing. Then bullish pin bar, when you see something like this on chart, bullish pin bar give you sign of doing going to bullish. So when you see this bullish inside bar like this, it give you a sign to go for buy entry or exit. When you see this dragonfly dodgy, so it is sign of bullish actually too. So the next ones are for bearish for downtrend, like candlestick for downtrend, that more candlestick, but this those are the like beginners level that you need to go and study them. Then that is bearish maruzubuzu, then a strong one candlestick of bearish is a sign of sell too. Then there is bearish engulfing, a small green, you see that one is a small red, so this one is a small green and a big red, so that is engulfing. When you see it is a engulfing, a sign of sell. Then this one is, that one na hammer, this one na shooting star. When you see this shooting star, it means a sign when you see it with this small body of the red candlestick and long high wick of the candlestick is a shorting star, it means sell, you are going a sign of sell. Then sweet stop, then when you see this sweet stop like this, is a sign of bearish, is a sign of sell. Then hanging man, when you see the small body and a large wick, low wick, so it is mean hanging man to sell the market, to enter it direct. Then evening star dodgy star, it means you go see those kind shape of candlestick, so it means a sign of sell too. So guys, those are the candlesticks that you need to focus on: candlestick pattern, bearish pin and bearish inside, and two I might not explain. So you have to know these terms of candlestick patterns and chart patterns. So they are very quite similar to understand. So when you see it here like this, for example, this forms a shape of chart pattern. Actually, this forms a shape of chart pattern. Actually, that one I want to like treat this variation of. So can you guys just like uh tell me which shape of pattern is this? So actually this is what we call, because the market starts from what, from bullish, right? This is what we call bullish wedge, feeling wedge, right? Bullish wedge, feeling wedge. It might give you a possible continuation of bullish trend from here. because the market don't give you already what a sign of that we usually. So you see, but this is a like bullish wedge. Let's go back to our chart. You might see it. This is a failing wedge. Actually, you see it, bullish wedge pattern. So it will give you after this breakout. That is what we call a buy here. So this is a bullish wedge chart pattern. So and this is a sign of like what we call hanging man, shooting star. You see, but this one is a shooting star candlestick pattern. So if you see something like this, give you like what we call a shooting star. So you have to understand this. This is our last class of our life. So thank you all, and the next class we are going to discuss about fundamental analysis.